Hey, this is Chris from Stockspot. Now, super funds in Australia recently cracked through $4 trillion they're managing, which makes superannuation in Australia one of the biggest private pools of pension money in the world. That's huge growth over the last 10 years because it was only about $1.8 trillion back in 2013. Yet, what's interesting to me is despite this growth, what we haven't really seen as improvements in cost or meaningful improvements in cost over that time. And where in other industries, as they get bigger, businesses are able to reduce the cost for consumers. Tesla's is a good example. They were very expensive 10 years ago when they first launched, but now they're a lot cheaper and a lot more accessible. What's interesting about super is this doesn't seem to happen as these funds get bigger and bigger. And there's many funds that have grown from 100 billion to 200 to 300 billion over the last 10 years. We haven't really seen their fees come down at all. And so in this video, I wanted to talk about the two reasons why I think super fees aren't coming down in our super industry in Australia. And the first one is that consumers just aren't price sensitive. So I think unlike other areas like comparing your energy or your food costs, consumers just aren't looking at the price they're paying to their super fund because you're not spending it off your credit card, it's coming out of your super balance. So it really doesn't have the same impact, the same visibility. Plus people aren't really aware of the impact of paying a little bit more over the long run. So a lot of people would think that paying 1.5% for their super is okay, where in fact, the difference between that and paying 0.5% could actually be about $250,000 over your lifetime. And I think because consumers aren't sensitive, we just haven't seen the price competition in super that we have in other industries like energy, where the different providers are all battling to win your money and it's quite easy to switch and a lot of people are switching every year. So competition is the first one. The second reason is I think the people who are running super funds in Australia just aren't motivated to invest in the cost because as they get bigger, they can spend more on bigger teams, on better infrastructure, on nicer offices, on more opulent advertising and marketing spending and sponsorship of stadiums and sports teams. This is all very appealing if you're running one of these big super funds and a lot more appealing than simply reducing the cost, which is what I think many of them should be doing instead. And because there isn't a lot of competition on price, it allows them to continue to invest this money that they're growing into different services that just don't benefit the end members. So I think a part of it is due to the lack of price competition and price sensitivity, but also just comes down to the motivation of the people running these super products. They're not really thinking about what's in the best interest of their members. If they were, they wouldn't be spending, like many funds are, $20 or $50 million on advertising, where there's very little benefit going to the end members from that advertising, if any at all. And in fact, it's really just a way of puffing out their chests and looking bigger, which doesn't attract members either. And so that's a big difference that we're focusing on at Stockspot Super. We are looking at making sure that where we are growing, we're investing that back into lower costs for members. And we aren't spending money willy-nilly on areas that aren't ultimately benefiting the end members. And in Australia, I think there should be a bigger focus on this within super funds. How can funds, as they scale, invest more of that money that they're benefiting from those economies of scale, having fixed costs that are easily covered and then growing extra revenue? How can they invest that back into lower costs rather than just getting bigger and bigger and bigger and hiring more people and spending that money in areas that don't benefit members?